Hey everyone, welcome to the Stay Informed podcast. I'm your host, Jessica Gonzalez, and today I'm going to be joined by our special guest, Terry Lee, Informed CRO. On today's episode, we're going to be discussing lessons we've learned from our lending clients. Welcome to the show, Terry. Can you tell us a little bit about your background?
Sure. Thanks, Jessica. So first of all, CRO is Chief Revenue Officer. Often in our world, CRO can be Chief Risk Officer, and that is not what I am. So I'm focused on trying to build this company, and I've been here for about 2.5 years. My background is heavily in fintech. I worked at a company called Amount and helped spin that out of Avant. Before that, I was at FIS Global and eFunds and Intel and IBM, all focused on financial services. So thanks for having me, Jessica.
Thanks. So we're usually starting what we call a lightning round when we have special guests like yourself. We kind of just spit out a couple of questions and then you answer them, just to get to know you a little bit more, break the ice, if you will. So we'll simply start with this or that, and then we'll go to a couple of more interesting ones. So coffee or tea?
Well, I'm gonna be a problem child to start. So I have coffee in the morning and I have tea at night, most every day.
Or I wouldn't expect anything less than a problem.
Fair
All
enough.
right. What would you think that people say is your best soft skill?
So I thought a lot about this, and I'm going to say dad jokes because Jessica, you yourself tell me that I'm pretty good at that, and I couldn't think of anything else. So we'll focus on dad jokes. I think that's probably the best answer.
That's true. I do feel like everybody loves your dad jokes, but sometimes I am lost in the sauce of what it implies. But the cow patty one seems to be a favorite. Layered cakes as well, and cooking shows. So
Yes,
you need to
yes.
reach out to
I'm a
Terry.
little I'm a little older than you, so my dad jokes tend to trend a little bit more 80s, 90s, but that's okay. I'm catching up.
All right, sounds good. Last book you read?
It's called The Founders. It's the story of the founding of PayPal and all the folks that started PayPal, and how they went out and created a whole bunch of crazy stuff like everything from LinkedIn to Tesla.
Got you. This was actually asked of me at this conference this past week, but how do you use AI in your own life?
Yeah, so I mean, it's my own life, but it's also work related. So two tools. One is Superhuman. I use is an email front end that is fairly popular, I think, and they have an AI summarizer. So I can just put in some bullet points, and it will create an email for me, or I can put in an email and it will create some bullet points for me. So I find that to be very helpful. We also use things like Otter AI. I use Otter AI. Some people on the team use Fireflies, but that's basically to summarize a Zoom call like this and to transcribe. So both of those tools help me out a lot during the day.
Got you. Yeah, I think that when we started implementing Otter or Fireflies, there was even some hesitation from our own, if you will, fintech AI company. I know that Trevor from compliance was starting to say, "Hey, what are you going to use it for or not?" So I thought it was interesting that that was similar to the responses in our conference, and people had the same kind of fear. And it was crazy to think that even us, that is in the know of AI, still have some fear around it, huh?
Yeah, I mean, ultimately, it's just summarizing the conversation, but theoretically, it could summarize it incorrectly. It could instantiate something that I didn't say, but it's in the notes. And I hadn't thought about that. We just use it for internal use to make sure we're following up on everything. So, I can understand our clients thinking about chats interacting with clients and saying things that may be wrong. So, that's a big part of how to roll out AI successfully. So, and I think we'll talk about that later.
Yeah, it's a good segue too with the next question. How do you think, or what do you think is the most important in fintech innovation so far?
Well, yeah, so I don't know that we're there yet, but one of the things that I think about is giving people fair and accurate access to credit. I'll use my son as an example. He's 26 years old. He has a couple of side gigs and a main job. And if he were to go to apply for a credit, he'd probably use his W-2. He wouldn't know how to document his other income, which means he's either not getting access to credit or he's getting expensive access to credit unfairly because he actually deserves a loan that would be better. And that's one example, but there's a lot of examples of people from other countries and how do they represent their income, or if you're what they call a thin file with FICO or one of the credit bureaus and you don't have a lot of information in your file. It's hard to decision on you, and that just doesn't seem fair, right? Like if you're a solid person who's willing to pay back money and you've got a background in doing that, then you should have access to inexpensive credit. And I think fintech has done a lot of that, but we're not there yet by any means. So there's a lot more to do, and hopefully Informed plays a small role in that as well.
Yeah, I think one of the big reasons that I like what Informed is doing is because it's helping that kind of underrepresented community, making sure that they have the most applicable ways to get market and be able to get a fair, loan.
Absolutely. And then there's laws around that too. So you have to be compliant. I mean, not only is it the right thing to do, but it is also something you need to do to be in compliant with your regulators.
Yeah, definitely. So this one's interesting, and I'm excited to hear your answer. But what advice would you give your younger self?
Well, the honest advice is max out your 401k and live off what's left. Because if I would have done that, I probably would not be talking to you right now. I'd probably be on the beach somewhere. It sounds boring, but if you're in your 20s and you max out your 401k, you're not going to be working when you're my age. So that's what I tell my kids, and that's what I would tell anybody that's younger and has that, the time value of money. It just can't be beat. Compounding is magic, as I think Albert Einstein once said. That's my advice. Start investing.
Yeah, that's great. And I think when you're younger, you think, at least I was, right? I was like, you're fearless and you feel like nothing is going to take you down. So why invest? Because you're always taken care of, right? It's even something I struggle with now whenever I, send away my bonus money and make sure that it's put into investment, because I just feel like, oh, well, something will happen. But definitely right. I think that's great advice. So thank you so much.
Yeah,
Um,
absolutely. I mean, someone smarter than me once said, pay yourself first, right? So pay yourself first. Doesn't mean you can't have a nice car or new shoes. Just means just settle aside something first for your future self. And I think you'll definitely won't regret that.
Definitely. So is there something consistently you hear from lenders that has surprised you?
Well, I mean, I guess surprise to a certain extent. So I was thinking about when I talk to lenders. So let's think about it now. Most of what lenders talk to me about are fraud and compliance. And of course, there's always this background of operational efficiency and optimizing, and everybody wants to do more with less. But right now, I think delinquencies in loans and fraud are on the top of people's mind. And while that isn't too surprising considering what the economy has done and where interest rates are, what's surprising is the crazy stuff that people do and what lenders have to put up with. I think you were with me at Jessica. We were at a dealer in Dallas a couple months ago, and they told us about some woman who'd come in and bought a top of the line truck, drove it home, and then her first payment was due. She just said she didn't buy the truck. It wasn't her, and there was no video, and they couldn't prove she bought it. So she just essentially just said, "Hey, sorry, I can't." It's just shocking what people will do, and that's just an extreme case. But every day we see people exaggerating their income, creating fake pay stubs, and what lenders have to put up with. We at Inform can help with a little bit of that, but I think what's surprising is not only how crazy people will get, but also the new generation of AI generated fraud. So most people have probably seen deep fakes of someone like Tom Cruise or heard deep fakes or heard about somebody's grandmother, somebody's child or grandchild calling their grandmother to ask them for money. And it's not really the grandchild. It's a deep fake. And that's the future of fraud. And that's why the future of anti-fraud also has to be AI, because rules and humans are just not going to be able to keep up with that in the future. So, unfortunately, I think we're going to hear more and more crazy stories about what people are doing to be able to defraud lenders in our case, but, in general, defrauding people.
Yeah. I think it's definitely when we go do those dealer visits, hearing what they experience from a fraud perspective and what people are willing to, try to get past. It's definitely, a unique position, a unique job. I know, our friend at Ally, Kevin, he always talks about his funnest job was being a repo man. And that seems nuts to me. I just keep thinking like, why? That seems really scary. And like, putting your line on like your life on the line to go get a vehicle. But I feel like, the dealers, they love it. They have the experience, but it's definitely something that is consuming of time as well.
Absolutely. And honest, a little bit off subject, but there's some great YouTube channels on repos. and they're just horrifying. You're expecting these people to just get beaten up at any moment. But they manage. I mean, they're really good at their job, and they manage to pull up and throw the car on a flatbed and drive away without being killed. Like it's amazing. And obviously repos are going up, and 90-day delinquencies are going up. So unfortunately, but maybe we'll see. Well, maybe we'll see that come back down a little bit with the Fed hopefully is signaling yesterday that they're going to start cutting interest rates later in 2024, which hopefully will relieve a little pressure on people and help them stay current on their payments.
Yeah, definitely. I think the next time you visit, it started making me think is dealer visits are fun and we have really great visits with our clients, but we should really go visit an auction, because I remember the first time I ever visited an auction, it was just mind-boggling how many cars are in and out, all the maintenance that's done there, what they're fixing, how guys are just walking the lots, kicking the tires and being like, this car is worth $12,367. And they are just like made for all of that. And so it's super interesting, but how fast the auctioneers talk. It's another really cool thing to visit.
Oh, absolutely. My brother-in-law and his father and uncle are all car dealers down here in southeastern Massachusetts, and they can go. I have seen them at an auction, and they can really eyeball a car and put a value on it almost immediately, which is how to make money, right? Because they know they know they have value, they know what the value is, and they'll buy it, and then they can resell it pretty quickly and make a decent amount of money. But also another surprising thing I heard from some of our clients was the cost to go from, okay, a deal has gone sour, now I want to repossess that car and resell it, right? It seems pretty straightforward, but there's 4 or 5 intermediaries. There's just a huge amount of cost that is implied in that. So even if they can get a decent value for the resell, they still end up losing money because there's just so many people involved. And it just didn't occur to me, but it's amazing, and it ends in the auction, and it begins in the repo, but you have all these remarketing costs and all of those kind of things that are involved as well.
Yeah, and I think that definitely, AI is getting to the point where it's getting all those attributes and those data elements and the data consortium. And I think from the perspective, like that's where Informed brings a lot of value of having so much data and insights, not only about after the sale and what they're doing in the servicing, but also before, what are those, kind of behaviors that dealers that are consumers are behaving? What are their next steps, right? Which ones are most likely going to go to auction? Which ones are most likely? But there's so many cool things that people are doing with just even remarketing strategy, understanding kind of those perspectives, like where's the truck going to make more money, where is the differentiation from there. So really cool, interesting insights and data elements to come. But also in your conversation with lenders, what are their most pressing concerns?
Yeah, so we talked a little bit about fraud, but compliance is another big one. And the problem with compliance is you spend money on compliance, you don't make any money. If you spend money on fraud and you reduce fraud, you make more money at the bottom line. You spend more money on compliance. If you assume you're not going to get fined, because that would be saving you money, you don't really make any money. It's kind of just table stakes for everyone. So most people want to do, minimum viable compliance. MVC, I think maybe I coined that. So if I did, then here's the official MVC, minimum viable compliance. Nobody wants to be the most compliant lender in the country. They want to be the second to last, right? And then they just don't want to get fined. So I think that using AI can help you be more compliant, because it's a machine enforcing a particular process, and it has to do what you tell it to do. So it can't really make mistakes like humans do. And it also has access to data that humans just don't have in their mind. So hopefully we can increase compliance. When I say we, I mean typically AI, but also Informed, increase compliance, increase the adherence to processes, while at the same time not degrading the experience for the client, not creating friction, not increasing fraud, but kind of giving you a win-win. And we've seen that, especially around, one of the hottest topics lately has been GAP compliance. How are you canceling GAP and other ancillary insurance products? How do you refund when the product is no longer needed? And there's a lot going on there. And we see clients that are typically refunding 10, 20, 30, $40 more than they should be. They're not refunding when they should be. They're refunding when they shouldn't be. And we can supply that data in pretty much real time and allow them to be more compliant, but at the same time, save money. So, I think compliance is definitely on the top of mind. And in my 20 or 30 years in this business, I've never seen compliance get less rigorous. It always seems to add another layer. And that's why we invested in a general counsel, Tom Oshowitz, who spent 10 years at the CFPB. So he can bring that intelligence and experience to bear for our clients to help them understand what they need to do to comply and how AI can help them do that.
Yeah, I think that's really good. I think you're right. I mean, because AI and compliance around AI and regulatory items are, so new, people, we talk about all the time that lenders are teaching the CFPB and regulators what to expect, what are the questions asked. So I think, your term minimal viable compliance is super accurate, but it's also the
Trademark
of, so I think that's a really great value add from Informed, of being able to say, these are the expectations. I know that Tom is always looking out for the next law that's coming out and what are the things that lenders should be looking at. To that point, what do lenders ask you specifically about AI?
Well, I think it's interesting, and where you and I were both at a show in the past few days, Bank Automation Summit in Nashville, Tennessee. It's a great show. And I learned a lot, but one of the things I kept hearing was AI is so new. Like we're just at the cutting edge. ChatGPT came out in November of 2022, I think it was. It's only a year or so old, and I was like, okay, well, let's just take a second to think about that. ChatGPT came out, I think it was leveraging GPT-4, like the fourth version of GPT. It wasn't the third, but the 3.5, 3, 2, 1. So ChatGPT or Gen AI has been around for more than a year and a half, but the AI that we're talking about Informed has been around for probably 50 years. And, I've been working in what I would consider machine learning and cognitive computing since the 2000s. So this isn't a brand new thing. Some of it is brand new, but what we're talking about is fairly tried and tested. And essentially what it's doing is just a machine that is helping people understand large sets of data. That's really what machine learning is at the base. And that can be useful in lending. So when I talk about AI, I'm talking about things that are tried and tested and have been through model risk management and have SLAs. I'm not talking about talking to a computer about, what my balance is of my account, right? Like that's different. So what I would recommend is start with tried and true AI and things where you can get SLAs and you can feel comfortable, and then bite off something that's worthwhile of solving. Because if there's no big business case, you solve the problem, but nobody cares. So find something that's worth solving, solve it, and then build on top of that. Like Jessica, you run our customer success team. We bring people in and say, okay, where's low-hanging fruit? Can I increase capture at the dealer? Or can I make sure that I'm gap compliant? Let's fix those problems because they're important problems, or reduce fraud. And then once you've done that, people start to trust and they start to feel comfortable, and then you can build on it over time. So that's my recommendation, is embrace the AI that's been around, that's stable, use it to do something important, and then build on that. Certainly test with the exciting future things like Gen AI, but you're not necessarily rolling that out to all your customers right away. You're going to do a lot of testing and have to feel comfortable with that. And that, by and large, while we're doing some of that testing as well, by and large, we're focused on the machine learning that's been around for a while and is tested and been used. We're working with probably close to 50 clients now, including all of the credit unions we work with through an Origin. So, we've been there and we've seen that, and that's where I think you need to get started.
Yeah. I think you hit on a really good point, which is that people are getting more comfortable with AI. They think that AI is relevant. I think they've even heard people that have been successful in the real world using AI. And so I think that's where the big rush is. When ChatGPT came around, I think implementing, how do you implement AI is a question I hear lenders ask a lot. And I think seeing ChatGPT is a way for them to say in a very tangible way that, hey, this is how AI is being used, right? And not so much like the deep knowledge that T stands for transformation and that it's taking what you're doing and transforming it into data that it's answering the question. I think it's more of how do you implement, fully that AI technology.
Absolutely. And this brings me to another one of my patented phrases, because I know you love my patented phrases, Jessica. So right now, when you talk about Chat GPT, it is sitting on top of what people call an LLM. And that means large language model. And what it means basically is the AI has trained on essentially an enormous horizontal group of data. Think Twitter, for example. Everything in Twitter is now training Elon Musk's new competitor in the Chat GPT world, which he named for whatever reason Grok, right? So huge amount of disparate data. What we work in is the lending space. And we're not a large language model. I call it a vertical language model, VLM, trademark maybe, I don't know. And our AI has been trained on millions, 80 million documents that are all focused on lending money to consumers. That's it. So the likelihood of there being what they call hallucinations or errors is just so much less because we trained on very specific use case, not every possible use case. And I think that if you're going to get started in AI, you want to start out in a vertical with AI that's been trained on that vertical for a specific use case, because your success will be just much larger than if you're trying to boil the ocean and be horizontal and then hope that your use case will actually get something relevant out of that LLM.
Yeah, definitely. So when you're talking about, hey, lenders are talking about AI, but what really prompts lenders to get into AI automation specifically?
Yeah, so it's an interesting question because we were just at this bank automation summit. Primarily, I saw people like CIOs and CTOs, and they're all very interested in AI. And I'm sure their board and their leadership are often asking them, what do we do with AI? How do we stay relevant? What can we do? So they're doing a lot of things. They're testing a lot of different things at many different levels. But the people I talk to most of the time are not technology folks. They're typically heads of originations or funding or servicing, or maybe the leadership above them, chief lending officer, chief operating officer. And while they're all probably secretly maybe testing out AI in their own lives, I had the CEO of a lender tell me the other day that he had downloaded Microsoft's version through Azure or maybe through Bing, and was testing that himself and thought it was actually pretty interesting. For the most part, what the questions I get are, how do I reduce fraud and increase compliance and get more efficient without blowing my budget? That's what they really care about. That's what they lose sleep about. They don't think, wow, I just really got to buy me some of that AI, right? I think they're curious, they're interested, they're smart people, they're out in the market, they're definitely seeing AI, but at the end of the day, I don't think anybody is getting a bonus that, brought AI into the organization. Check, here's your bonus. It's reduced cost, reduced fraud, increased volume, increased revenue. That's what they want. That's what they've always wanted. And that's what we try to do from a business case standpoint, is improve those metrics.
Yeah, I think that's very accurate, especially like seeing in account management is that everyone wants to just run the business. They've just heard that that AI can help them run the business, right? It's the same business that they've always ran, but they want to do it more efficiently. And they know that if they don't do some of these, technology investments and go this way, that they may be left out of some of the markets that historically they've, owned. So I think that mostly it's that, lenders come and they say, hey, I've heard from I think, almost like 100% of our customers that come to us, it's through referrals. So like that relationship base where they say, hey, I've had really great success and, we've heard that it's been useful. But the biggest question is always, how do you get that implementation done? And I think that's why there's a big value in being able to partner with somebody like Quorum that's already done those implementations and gone through it.
Yeah. And I think what's important that you were talking about there is AI is not perfect. Machine learning is not perfect. You're not going to get 100% of everything you want out of the box. And part of our implementation process, part of our customer success team is to take them from what they get out of the box to something that is very valuable to them. And that takes experience in the vertical market, back to the vertical market. Not only does the AI need to be trained on the vertical market, in our case, lending, but you also need human experts on that vertical, in our case, lending market, who can then tweak and work on the system to make sure that it's really doing what you want to do. So to me, not if I was going to go out and buy an AI solution, like I wouldn't want to know that it's trained on the vertical market I care about. But I also want humans that know that vertical market. So you yourself, Jessica, came from Santander and Visa. You're a subject matter expert in the industry. We have other folks on our team. We mentioned Tom coming from the CFPB. And it's important to have humans that know what you're trying to accomplish and understand your business, just as much as it's important to have AI that's trained on your business.
Yeah, definitely. I think that, you hit on a lot of great points, but, whenever people are saying, hey, it's good to have the success, where do you suggest people start, right? Whenever they say, hey, I've heard about Informed, seems like I'm really interested, I'm ready to start getting the value of using AI and automation. Where do you suggest people start?
Yeah, so we talked a little bit about this, but at the end of the day, AI, like any technology, has to be successful incrementally in a lender or in a financial services organization in order to get support from leadership, in order to get funded and renewed. So my advice is to look at what you care about most. If I'm a lender, I usually use my three-legged stool, which is another one of my another one of my sayings, right? Like, so do I want to reduce cost? Do I want to improve compliance or reduce risk? And risk could mean compliance and fraud, right? So what do you care about? And let's just take an example. Like, we're working with a large captive right now whose focus was to increase their capture, to increase the percentage of business they get from their OEM dealerships. So we work with them to give them some tools up front that allow the dealer to feel more comfortable and to make it easier for them to capture data and documents, so that they feel more comfortable with the captive, and then they presumably send more business to their captive. So that was the problem. So let's focus on fixing that problem, because that will get visibility. That will get our sponsors their bonus for the year. That will get visibility in their senior leadership team. And then they'll say, hey, let's go do more of that. Another example was a big bank that had been having trouble with misrepresentation of income, and they had gotten hit hard with it. So, okay, let's fix that. Right? We have a big knowledge base of tens of millions of documents and millions of people that we've seen over the past 7 years. We have a lot of insight into income and how people might misrepresent it. So it's not only can we take a pay stub and probably tell if it's a fake pay stub and calculate that income, but we also will know if we've seen that person before and give people insight into whether they're misrepresenting that income. So then that's the low-hanging fruit for that bank. Let's fix that problem. And then you get support to do other things because you've fixed the problem that matters for you. So my advice is find a problem that matters to you and your company, and then understand how AI can help you address that problem, and then address that problem, and then go to the next problem and the next problem. Because what you'll find is once you install a platform like we have it Informed, many of those problems can be fixed, but it doesn't mean you have to boil the ocean and do them all at once. Let's pick one you care about, that your management cares about, your board cares about, and let's fix it. And then going to the next one will be much easier.
All right. Well, thank you so much, Terry, for your time. I really appreciate you being on the podcast here. Until next time, everyone, stay informed.
Thank you.